from there on, another sector that has been given a lot of impetus to in Union Budget 2017 is especially the oil and gas companies. And this is majorly from the perspective of creation of a major integrated oil company, on the back of which, if you see the counters as well, you have IOC, which is up 2.3%, ONGC again trading in the positive with gains of around 0.8 to 0.9%, BPCL up around 1.8%, HPCL, we did speak to the management in the morning session, that counter is also trading in the positive as we speak. Let's pull up our HPCL on the screens and see what that stock is doing as we speak. There you go, gains of almost 1.2%. So majorly trading in the green. In fact, we will, let's listen into what the OMCs have to say about Budget 2017, and especially from the point of view of a creation of a major integrated oil company. We have been joined by B.Ashok, who's the chairman at IOC firstly, as well as we have A.K. Srinivasan as well, the director of finance at ONGC. Firstly, to start off with, I will start off with you, Mr. Ashok. The finance minister, as we know, has announced the creation of a major integrated oil company. You would have heard from the government as well on the same in terms of, what are their thoughts. Are we heading for one major oil company, or do you think it is going to be 2 to 3 major oil companies?
Firstly, let me say that probably what has been expressed is a very forward-looking intent of the government of India. While there have been earlier, informal chats regarding, how we need to have a large corporation. Considering the world oil company scenario and so on, there is no specific proposal at this point of time. But what has been certainly said is a very progressive intent of the government of India, which will probably become an enabler for things to happen in the industry. Having said that, I must also say that energy is a very, very strategic industry, and it is necessary that the strength of the industry is taken care of as a whole. And basically, the industry is also very volatile. And as an integrated entity, one of the things which helps any undertaking is that an integrated entity is able to take care of the volatility in terms of the business much better than a standalone business. So from an Indian Oil's perspective, I think this has been also our emphasis right for the last nearly 2 decades, that we are trying to become a vertically integrated company. That's why we have gone into exploration space and we have gone into downstream petrochemical space and all that, so that the company can have stability instead of volatility. So I think in terms of an intent, it's been very good. Indian Oil again has been doing some of these measures in terms of standalone companies coming into our fold. We have had certain mergers like Bongaigaon Refinery, which came into our fold during the last decade. We have also had IBP, which was a large standalone marketing company which has come into our space and so on. And there are more opportunities, especially in the upstream as well as the downstream sector, for consolidation and integration. From an international perspective, I would say that a strong integrated company with very strong financials would help us to leverage our strengths much better in terms of our world standing and so on. If you see the Fortune listing and all that, in the top 10 companies of Fortune 500, there are many oil and gas companies which are hugely integrated. So while we are large in our own sense, but when you look at the oil majors of the world, probably we are still not there. So from all these perspectives, it helps us to improve our standing in terms of leveraging our position in the world and so on. So an integrated large company would certainly be of use. So there are opportunities. I wouldn't say that, I'm not sure whether the understanding is right that the intent is to create one large mega corporation, merging all the companies. I'm sure that is not the way it is. And the intent is that standalone businesses should be integrated with larger companies. And we can see opportunities. It could be even in the petrochemical space, it can be in the upstream space as well as in the midstream and downstream space. Right. So I think as an intent, it's a very progressive intent. So this will help us to firm up our own actions.
Right. Mr. Srinivasan, what would your view be on the same? Would you agree with what Mr. Ashok is saying, or would you have a different opinion on the same? I think we don't have Mr. Srinivasan yet on the lines with us. I will continue with Mr. Ashok. Mr. Ashok, what I would want to understand is that, currently we are talking about a huge M&A where companies, which belong to the government. So one culture match exists, but operationally there is a huge difference between refining work culture. Even if you talk about where in Bathinda as well as Maharashtra refineries go, you would be having higher complexity refinery while ONGC would be having a lower complexity refinery at a location. How do capital allocation priorities then get adjusted if something like this happens?
Again, as I said earlier, I don't think the intent is to merge all the companies together. Okay, there could be different models which can be looked at by the companies concerned and which we are looking at. For example, if I can say that we have already been taking certain steps towards ensuring that there is no duplication of assets creation and so on. Even if you look at the downstream oil companies, for example, we have been working together in terms of providing common facilities, whether it is terminaling or LPG facilities and so on. And if you, recall, about a month and a half back, we announced a large integrated refining and petrochemical company between the three downstream PSU oil companies, that is IOC, BPC and HPC, 60 million ton refinery and petrochemical complex in the west coast of India, where we would have a 50% stake and the other two, BPC and HPC, would each have 25% stake. So in terms of the intent, we ourselves recognize that there is a need, because we need to operate in scale, we need to operate in terms of large financial outgo, because ours is a very highly capital intensive as well as technologically complex industry. So we need to integrate our efforts. Similarly, in the upstream space, when you think of our overseas acquisitions and all that, there have been large acquisitions during the last year especially, where we have gone in on a consortium basis. It is not individual oil companies going and competing for stakes, but we as an integrated Indian entity, we have gone on a consortium basis. And if you recall the assets in Russia, where OVL, IOC, Oil India, as well as Bharat Petro Resources, which is BPC's arm, we have all together gone into the Russian oil fields and taken huge stakes in some of the large producing fields in that country.
Right.
So I think moving forward, there is a lot more that can be done in terms of consolidation.
Right. Mr. Ashok, analysts are of the opinion that if you talk about where refining assets are concerned, they are undervalued and they are still not valuing the true free cash flow power of the assets. What is your view of the current operational valuation of the Indian PSU refining assets as per the market valuation? And do you think operationally we are heading for a better 2017 versus 2016? Because, that could lead to a further upside then.
No, one thing I can speak about Indian Oil, of course, certainly, we also to some extent understand that, we are not really valued in the true sense, because we have tremendous strengths as an industry. Probably now the market is recognizing some of those strengths, and accordingly our valuation is also going up. Our market caps today are really picking up. And shares are also being traded more frequently, I would say, in the marketplace. But moving forward from an Indian Oil perspective, certainly there has been a lot of interest of late, especially after commissioning of our Paradip refinery last year, and now it is coming to some sort of a stabilized operation. There has been a lot more interest, and I think, even on a world scale, probably we are operating some of the most complex refineries in the country. And world is really recognizing that, we have greater flexibilities. Normally when you see around the world, people ideally set up refining industries which are based on particular sets of crude and so on. So when that is either available or becomes not available or becomes more expensive, then there is an operational problem. Whereas in India, we have been consciously focusing on expanding our crude oil baskets and so on, and improving our technology in the refining front in such a way that we are able to process different types of crudes from various parts of the world. So this is certainly giving us benefit in that sense, and thereby we are able to show better operational efficiencies and thereby improve our bottom lines as well, which I think is generally being recognized now by the industry and all over the world as well.
Mr. Ashok, one thing I would want to understand is, I take your point that, however the merger happens at whatever stages, post the merger, do we expect a revamp in terms of where retail outlets are concerned, closer integration if you talk about where production as well as storage stations are concerned? What I'm trying to understand from here is how much operational synergies are there, at whatever level of merger you talk about, and by how much could GRMs go up, and how much costs could come down on the back of this kind of an integration, and how much margin increase we will see with respect to petrochemical exploration as well as refining integration?
See, one thing is, it will be difficult at this point of time to state any numbers. But the broad point is that when you consolidate and when you integrate, you are trying to improve your operational efficiencies. And even in the past, when we have done certain mergers, as I mentioned about the BRPL or, Bongaigaon refinery, as well as the IBP merger which has happened, we have certainly been able to consolidate on both the retail front as well as on the refining front. And certainly it provides for greater, operational flexibilities as well as operational efficiencies to be garnered. And even amongst the three oil companies, downstream oil companies today, we are operating a number of common user facilities. For example, there are big terminals now which are operating on a common user facility model, and where we have formed a separate joint venture to operate the terminal, and all the three companies utilize the same facilities. So this helps in terms of avoiding duplication of facilities, and obviously that has got a cost implication which is much lower. So our operational efficiency certainly improve. Similarly, there are new pipelines which are coming up on a common user facility mode, and this again helps. One is, we are able to take care of the industry's requirement as a whole instead of taking care of individual oil companies' requirement, and build the facilities accordingly so that all of us could share it equally, and overall we are able to bring down the logistics costs and so on. So definitely there is money to be had in terms of improving these operational, integrating these operational areas, and that's what we will try to garner.
Right. And Mr. Ashok,
but coming to the marketplace, I believe that
right,
in terms of the retail assets, yeah.
Right. Mr. Ashok, a quick one in terms of where Q3 earnings is concerned as well before we let you go, because profits have gone up 28%, margins also look pretty good. Do we expect this kind of performance to continue? Completely running short of time, so a quick answer on that.
Okay, we have had an excellent 9 months, let me say that, and we hope that this trend would continue. Of course, the good performance has been due to one, very good physical performance and operational performance, as well as some gains on inventory, which we have had as compared to last year. So while we do expect that some of these impacts will continue in the last quarter as well, probably next year we do not see any sort of inventory effect coming into play, but we will continue to improve our physical performance.
Right. All right, Mr. Ashok, thank you for speaking to BTVi and giving your candid views in terms of where the creation of a mega major integrated oil company is concerned, as well as in terms of where earnings go. And thank you very much for speaking to BTVi. The stock also trading in the positive as we speak. In fact, let's slip into a short break. Up next, we will bring to you Gautam Trivedi of Religare Capital. Please stay tuned.